Hey guys, this is Ken McElroy, and you are listening to the Mailbox Money Show with Bronson Hill.
Welcome to the Mailbox Money Show. I'm your host, Bronson Hill. I am so excited to be here today. I feel like I feel like our shows keep getting better and better. And this one is going to be awesome. Today we have Caleb Guilliams, and I got introduced to Caleb through a number of different people. We have a number of different connections, but somebody had read his book called The End Asset and just said like this and your book, Bronson, Fire Yourself. These are on like lists for my family, like library. They have to read it. Here at the Family Fortune, I was like, wow, this guy, I got to talk to this guy, Caleb. He sounds pretty amazing. So he's the CEO and founder of BetterWealth, a financial coaching firm dedicated to empowering people with clarity, control, and cash flow efficiency. He started reading investment books in his teens. At 19, he basically took over a bank. So he's basically rethinking a lot in finance. Talks a lot about a whole life insurance. We're going to talk about different insurance products as well, and why you would consider, why you wouldn't consider. But before we bring him on, I have my amazing two-time best-selling co-host Nate Hambrick in the house. Nate, I want to ask you, have you had any experience with whole life insurance?
Yeah, so I actually sold insurance for about 5.5 years, but
I
specifically
didn't,
on
Nate,
the
you have all these things that like, yeah, I won a state bodybuilding contest. I was like, what are you talking about? Like, where's this stuff coming from? Yeah, I actually sold it. Okay, so you sold insurance for, okay, that's another past life.
Yep, still get the renewal checks every single month. I get probably 12 to 18 checks every single month. And that was one of the first few. That was probably my second stream of passive income that I built. But yeah, on the infinite banking side, I mean, infinite banking is incredible. And it's one of those things that sounds fake the first time you hear it. And then the more wealthy people you meet, the more conversations you have, you realize, oh, wow, this is a really, really powerful tool, not just from an income generation standpoint, but also from a security standpoint and a liability standpoint as well. So this is going to be an awesome chat.
I think what you said is true in finance and just in life. A lot of times things can sound too good to be true. And some things are too good to be true. So you have to be cautious, but there are some things that sound too good to be true. Like with taxes, I was paying over 25% per year, making 200K a year. And then I got down to paying 1%, right? I know people that make millions of dollars a year and pay zero taxes, right? And there's a legal way to do it. And so I just love when you're in this world of finance, like you'll find people that are doing all kinds of great stuff. So anyway, without further ado, let's welcome to the show, Caleb Guilliams. Welcome, brother. Good to have you all the way from Nashville. Got that amazing background if you're watching on the video. Good to see you, man. How you doing?
It's an honor to be here. Thanks for having me.
Oh man, I love it. I love it. Well, you have done more by the time you were 20 years old than most people have done in their whole lives in finance. So, why don't you walk us through taking over a bank at 19 years old? That's not like a thing most people do.
Yeah, I was parented well, and just give kind of paint the story. I grew up in Wisconsin. My dad was a PhD molecular biologist, and in eighth grade, I wanted to follow his footsteps, and then I took biology. I was like, you know what? Not in the cards, not something that I enjoyed or really it never really clicked. And so, but it was always naturally into like business and money. Got a job at a chicken farm where I gutted chickens and made $1 for every chicken I processed. And
Yeah, I did
I
chicken. You literally take a knife and did you
I can
cut the head
process a
off first, or
chicken.
did you
No,
bop him
so
on the
it
head
was
first?
chicken was dead,
Okay.
came in, depulucked, and then I could take a chicken with a head on it, the feet, and have the whole thing in the tank in less than a minute. Okay, so that was
Yeah,
not right
can you
away,
still
but
do that? Because I'm gonna send you a chicken, and we're gonna have you do that on the next time we have you back on the
I would
show.
blow you guys away. We could have like the whole like let's raise money. I like it would be yeah.
I think Nate and
It's
I
fun.
should do it
It
too. And we'll have to sign a waiver or something. So if somebody cuts their fingers off, they won't. But like, so you got to be within a minute you're doing this. You ever see the movie Napoleon Dynamite where the guy starts talking and he's like, this may be
No,
before your,
I've never seen it, but I know the quote because so many people have mentioned it. So I probably should just watch it
oh,
because you're not the
It's
first.
horrible.
so
You,
many
you will wonder
quotables.
why people keep quoting. It is horrible and incredible
Yeah,
simultaneously.
it's like if you want to go back to middle school and be that awkward like now, that's exactly how it feels for the whole time. And then after you watch it the first time, you're like, this thing is just so ridiculous. I got to watch it again. So anyway, on that note, okay, so you were killing dead chicken. You're getting
No,
chickens. Okay, so you're doing
I
that,
was gutting dead
gutting
chickens.
that.
I was
Okay,
gutting
even
dead
better. Yeah.
chickens, making
Okay.
$1 for every chicken that I processed, and read two books: Richest Man in Babylon and Good to Great. Probably two books that we've all have read that have impacted us. And like those two books were like was
Yeah.
into leadership and business, and then the whole money space. And then from there, it became really clear that I wanted to do something in the money space. I got a job when I was 17 at a bank,
Okay.
and tried to learn everything I possibly could. I was homeschooled, so it allowed me to work all day Monday and Friday. So I got to get some great experience. Worked in our investment department when I was 18 years old. And then when I was 19, the person that was running the bank's investment department left and took another job. And at 19 years old, literally when I looked like I was 14, I took over the corner office of the bank. And this is a couple takeaways is don't trust banks with your money, because what were they thinking? But then the second big takeaway is like, people don't care how much you know until they know how much you care. And as cliche as that is, it's cliche for a reason. And there were people that just poured into me because they knew that as a kid, I wanted, like, I just finished reading 7 Habits of Highly Effective People. And I'm like, I should have a mission statement, and I led with why. Thank you, Simon Sinek. And so that was one of the things that I think people just like really knew that they like, I wanted help and I desired to learn. And one of the best things that I did was I didn't try to make a quick buck, but I played the long game when it came to learning, and learned a lot about life insurance, about taxes, investing. And at 21 years old, I realized that the bank was not going to be like the ticket to where I wanted to go. And so I left the bank on good terms, but left the bank at 21 years old to start BetterWealth. And now I run betterwealth.com, and we have clients in all 50 states and do lots of things: insurance, taxes, estate planning. But I think we're going to be talking about the very exciting topic of life insurance on today's. So it's a lot of fun, lots of stories, a lot of failures, but I'm grateful for it.
It's just like degutting a chicken, right? You just got to figure out the most efficient way to do it. So,
right.
Nate, I was going to ask you, I mean, besides degutting chickens, what's the thing you're most excited about this interview for?
Yeah, I need to get some chickens stacked. That'll improve. Actually, in all seriousness, that is something my wife and I want to do at the next property we purchase. But yeah, I mean, there's so much to learn. And so actually, let me just ask you a couple questions, Caleb. So, obviously a lot of wealthy people use infinite banking. Feel free to add to this, but my understanding is, tax-free income, which is awesome. It is the most heavily protected asset, period. So if somebody sues you, they can't touch it and that kind of stuff. What are some of the bigger reasons that people get into infinite banking? Like what's the sales pitch in a couple bullet points?
Well, if you don't mind, I'll take a step back and paint because I didn't start working at the bank to sell life insurance. So there was a journey up there. By the way, chickens are the gateway to every conspiracy. So just so you know, like, I'm pumped for you. Raising chickens is like the gateway to so many things. So I look forward to future combos there. When it comes to infinite banking and life insurance, one of the biggest misconceptions, period, is that it's an investment or it will be an alternative to other investments. Well, that for me is what I thought to be true. And so it was an immediate turnoff, and I was all like, buy term, invest a difference, wanted to do the whole hedge fund, real estate investing and all. And then working at the bank, banks are a very profitable side of the business, and the bank had life insurance. And then I learned that over 3,200 banks in the United States have what's called bank-owned life insurance. And most corporations, Fortune 500 corporations, use life insurance to retain their key employees. And then as I was learning from mentors, I realized that a lot of them had life insurance on their balance sheet, and they had all one thing in common. The banks, corporations, and the wealthy people that I was learning from weren't using life insurance as the investment, but were using it as a place to store, protect their family, and use throughout their life. And that was really interesting to me, because I was like, okay, I looked at things very much like it could either do this or that. It's either doing this or that, and you want to maximize the rate of return, compound interest. And I think the big epiphany for me, and this goes into infinite banking, is our money's got to reside somewhere. Our money is always flowing somewhere. So a lot of people are saving money into a savings account, getting some interest rate, taking that money out, investing it, and getting the return and benefits of that investment. And the only difference in life insurance is a place, I would say a better long-term place, but is a place that you can store your money. It protects your family, but you can also leverage it and use that capital to reinvest in things that are actually investments. And what you essentially do is now you have two assets. You have the benefits of your life insurance, and you have whatever the activity that you're doing. And over time, the epiphany for me was, I can get the benefits of compounding. I can get the benefits of life insurance, which there's a lot of, and I can get the benefits of me investing in myself, my business, real estate, you fill in the blank. And over time, understanding life insurance and all the benefits that it gives you, that's cool. But the trade-off is I would never do all of that and not do what I'm doing now. But if you're telling me I can do both, that for me is the unlock. So I wouldn't necessarily say that's infinite banking, but infinite banking is essentially saving your money, using it, treating yourself as the bank, which I think can be misleading in marketing. There's a lot of scammy people out there that use infinite banking, and I would tell you run. But it's using life insurance at the foundation of that. And then one of the things that we do is not just try to create that message, but you have to make sure that the insurance is set up properly, that it's early cash value, that it's flexible. And like that's easier said than done. Most of the people out there that are talking about insurance will get the message right, but the insurance policy will be a little above average. And there's so much dangers there. So I know I threw a lot at you, but that was like the epiphany. That's very much how I view life insurance as a better place to store, protect, and use, not as an investment. It's mainly as a foundation.
Yeah, it's interesting because there's a lot of benefits to life insurance in the sense that I believe, you can correct me if I'm wrong, but if you're sued or you go through bankruptcy or whatever, your life insurance is still, no one can touch it through a lawsuit. It's very protected, kind of similar to a retirement account. It can be used as collateral, so you can use it for different assets. And then one of the biggest benefits that you touched on too is a lot of the tax benefits. You can basically have money in there that you're growing basically tax free because it's inside an account. And it is exceptional. And then, I've looked into this for myself. And again, I'll just be completely frank here, because I'm a real estate professional, I really pay hardly any taxes anyway, right? Because I've got so much depreciation, I'm able to get it from other things. So I've seen less of the tax benefit side, but for a lot of people that are high earners are paying, 30, 40, 50% in taxes. This could be an incredible way to move forward. Now, the thing I couldn't get around when I was looking at it, had a call with probably 3 or 4 calls with a guy, and I was trying to get down to like, well, what actually are the fees and what actually is the return, and what are, insurance is like, they're going to find a way to make money. So it's okay. Well, what does this actually look like? And I couldn't really, and even the guy couldn't really fully explain it to me in the way that made me feel comfortable. Yeah. And so I got to where I was like, just why don't you get in a little more what you're saying about things to watch out for, or like types of policies that people are pitching that are like, I think they were very high quality. It was like a very large, well financialized insurance company. But again, these guys.
Do you remember how much cash value you had immediately when you put in?
So I think that was another issue, is that you're basically the first couple of years, all the money was going to the commissions for the. So like, and that's pretty common. That's pretty common.
Yeah, it's common. It's common, but that tells me right there a lot. So let me break down. So you talk about credit protection. Every state's a little bit different, but you have, Enron executives are still getting benefits from their insurance policies. Total fraud, but in the state of Texas, really good for insurance and annuities. And that just tells you that every state's a little bit different. But yeah, some of the best credit protections, depending on what state you're in. The tax is very similar to Roths. So you don't get a deduction going in, but once in, it will grow tax deferred. So the day that you die, you can take out tax-free loans, because a loan's not a considered income. And then the death benefit gets paid out income tax free. And so have you heard the phrase like you borrow and then you die kind of deal?
Yeah.
And it's
like
buy,
that. Borrow, die. Yeah, correct. Yeah.
It's very similar to that. And so you're built onto a contract that's essentially built in from day one. You can take a loan. You don't have to pay it back. They're collateralizing your death benefit. So there's some aspects there. When it comes to the pitch, and I'll just say this because I'm a very logical person when we're thinking about this, is number one, we have to, when you're putting your money into life insurance, you really, what are you comparing it to? For you should compare it to a high yield savings account. So a high yield savings account gives you an interest rate long-term, and over time, because I'm going to use the last 30 years. So right now, interest rates are 4+% that you can get, maybe 3.5%, 4.5%. But history, can we agree that it's around 2%, maybe like 2% when you look at in the last
30 years,
30 years, give or take. And so in a life insurance policy, after all the fees and commissions and all, you look at what's called internal rate of return. Internal rate of return, it just looks at the actual cash on cash. It factors in the commissions, it factors in the death benefit, it factors in all the other costs, and you're going to get anywhere from 3.5% to 4.5%. internal rate of return. Right now, with high interest rates, you could say 5%, but again, we'll just say for fun, 4.5%. 4.5% long-term internal rate of return. Now, in a high yield savings account, you have to pay ordinary income tax on the on the interest. In a life insurance policy, you don't. So when you factor in tax rates, when you factor in, you have a permanent death benefit, when you factor in all the other benefits of like chronic illness rider, critical illness rider, when you factor in the safety, when you factor in some of the other benefits, you could say that life insurance to a portfolio could give you anywhere from 6 to 9%. Not that it's getting you that, it's getting you only 4 or 5%. But when you factor in taxes and other benefits, and buy term and invest difference, well, you have to buy term. You already have a built-in life insurance. So when you look at that, you're getting it's not gonna knock your socks off, but you're getting a better return than maybe what you think. Yeah. Now, also the policies that we're designing give you early cash value in the first year. I mean, a lot of times we're seeing 70, 80, sometimes up to 90% first year liquidity, whereas most life insurance policies, as you know, take a couple of years to even see cash value.
Mm-hmm. So is that because the commissions get paid to the agent over more years?
No, that's because we just negotiate the lowest commissions possible. And again, you might be like, wow, you're such a saint. Well, we have a lot of people coming to us because of what we do. So it's like, here's a value prop. Just do the right thing for the client, and then you'll attract really good people. So that's one of the things that we do. And I don't want to throw shade. A lot of times people are not trained that way because, if you're making 1/10 of what you could be making, who's going to train that? But it's like, well, if you do the right thing, then that's why we have clients in all 50 states, is because people come to us for that. So
walk us through the journey of that. So early cash value, 70 to 90%. So somebody puts in 50 grand or 100 grand or multiple hundreds of thousands of dollars, then they take the cash out. For a lot of the people that you work with, walk us through that journey. Do they take it out as quickly as possible? Do they let it sit there for a year and then pull it out? What does that look like?
Yeah. So we have a few clients that will take it out immediately. And we like when people wait at least 30 days, so it doesn't trigger anti-money laundering. Like what's happening. It's like really, but pretty much after 30 days, you have access to 95% of whatever your cash value is. Okay?
Wow. So let me slow that down for a second, just for people. Like that's really interesting because if you have the cash, that's been an issue too. If you wait 2-3 years, but if you can have almost all of their 95% of the cash value right away, and you can just, that's huge.
And Nate knows this. We do what's called front loading. It's a common strategy where if people are sitting on a bunch of money, like let's say $1 million or $500,000, they could like front load majority of that into year one, and then every year after that pay very small premiums, and majority of their capital is liquid. Now they can. Now this is what you have. You have a life insurance asset with all these benefits, and you have hundreds of thousands of dollars that now you can use to reinvest. So here's the pros and cons to that, because I think we all need to know the pros and cons. The major con is you don't have all the money that you put in. In a high yield savings account, you have all the money that you put in. In a life insurance policy, it takes about year 4 or 5 to have more money than what you put in. And you still have majority of it, but you don't have all of it. That's con number 1. Con number 2 is not everyone qualifies health-wise. If you can get between those 2 cons, and there's ways around that. If you don't qualify, then you can get a business partner, your spouse, your kid. So there's ways around that, but not everyone qualifies health-wise. So then why do the life insurance via the high yield savings account? Is you do the life insurance because life insurance in the short term, but more medium and long term, give you way more benefits than funneling your money through a high yield savings account. Hence why I would even recommend in your situation, if you had a properly designed life insurance policy, if you could get past the first 5 years of it being a little bit behind the high yield savings account, I think over time you would be like, all these benefits to a life insurance policy, and the fact after year 5 or 6, you actually have more money than what you would have in a high yield savings account, and it gives you all those benefits, and you get to reinvest. So that's how I would pitch it from a standpoint of,
makes sense.
Where it would make sense, but it's not a get rich quick thing. And a lot of people sell it as an investment. And I think that's a huge mistake.
Right. No, it's more of a structure. Nate, I know you are the best-selling author of the 18 Laws of Leverage. How are you leveraging? How would you say people can leverage this in their portfolio that they're not thinking about?
I mean, there's lots of opportunities. I don't think I'll be able to give any earth-shattering revelations that Caleb won't. But ultimately, the thing that really sold me on this concept long-term is that, I am earning interest-free money that I'm able to pull out and use elsewhere. The other thing that we haven't really talked about is kind of in a way, and I'll oversimplify it, but the interest you're making on your money that's in the policy that you also have a loan on is also paying your life insurance. And so, when I get older, life insurance isn't that expensive right now, so it's not a huge deal. when I'm old, it's going to be a huge deal, right? That stuff is expensive. And so that's a great form of leverage. Law 17 is don't own anything on paper. And so from a litigation standpoint, it is like the best guarded money that you can have. So there's lots of opportunities for leverage. And Caleb, let me know if you've heard of this, but one of the strategies that some of my in-laws do is they specifically don't have life insurance on anyone until they're a senior citizen. Then they'll take out a $10 million policy. And then every couple of years, all the family members get it split up. And so they're paying significantly less than 10 million per person. And every couple of years, my in-laws will get a nice little check. So I don't know if you've heard of those.
Wait,
kind of
are you talking
strategies
like they're investing? Is it like life settlements, or are they investing in their own family?
So my understanding is the individual do it for themselves, but they won't have life insurance until they turn like 55 or 60. Then they'll buy like a super expensive term life insurance. And then
when
they
they die, the death benefit pays out. Yeah. Here, I mean, that's Warren Buffett. If you want a non-correlated asset, buy other people's life insurance. And when they mature or die, then the death benefit will get paid to you. And it's like, if you want a market rate return that's not correlated to the market, that's a common investment, which tells you one thing: the death benefit is an asset. Like, it is an asset. You may not get super in love with it because it's predicated on you dying, but that's like, what are the two guarantees? Death and taxes. Well, if I have an insurance that's literally leveraging my death, if you're creative, you can leverage that while you're alive. And that's an example of people doing that. I'll say this: I'm maximizing life insurance on my family, but the moment I have a first world problem of needing more to save more money, where I'm going to go next is my dad. I'm going to fund life insurance on my dad. I'm going to own the cash value. So I'm going to still be able to use the 80 to 90% immediate cash value to be able to reinvest. But when my dad dies, most likely he will die before me. When he dies, that death benefit will get paid income tax free to the beneficiary, which will be myself. And so while that's like, when people are hearing that and they're like, oh, I want to do that before I insure myself, I still believe the greatest person to insure and protect is your family first and foremost. But this is a strategy that the Rockefellers use with trust, and many other families, like every generation, if they have life insurance, no matter how successful or unsuccessful you are, life insurance is like the great equalizer in saying, okay, when you're done, we're going to make sure the death benefit gets paid back into the trust or to the family. And if every kid got life insurance when they were born, every family would get wealthier every generation.
That was going to be my follow-up question. How do you think about this for your kids?
I mean, my parents have life insurance. My wife and I have a lot of life insurance, and my daughter has a life insurance policy. We got it on her 2 months after she was born. And like, I'm going to teach her how to create a family bank. And so I'm pro Roth as well. I'm not anti Roth, or, even with 529 plans, I think with the new laws, there's an area where you could maybe be a little bit more liberal of what education is. Because do I believe my kids are going to go to college? No, with how fast things are going. But life insurance essentially allows her to have her own family bank. And we're going to teach her how to start businesses and, future cars. Like, she's going to purchase things, but that bank ultimately is going to be allowing her to get really cheap access to money for her to be able to use money throughout her life.
I love it. I have an experience share around that. You guys were talking about life settlements, which, for people don't understand, I'll share kind of a war story here. So life settlements is an investment where, it's funny you laugh because you probably know where I'm going with this, but so it's basically an investment where people they're insured, and it was all universal life insurance policies, which are the highest premiums, but there is some cash value, but usually no cash value, but they have to keep paying them. And as people get in their 80s, some of these get really expensive. I mean, some is like $1 million a year, so they're paying a lot, but these people are going to die at some point. So there's these huge benefits. A lot of CEOs would get them, or other people, and then eventually they wouldn't need them anymore. And so these people can afford the policies, so they'd sell them. So we did a pool of, maybe 14 or 15 of these, raised a bunch of money. I think actually, I didn't raise money. I just kind of invested personally. But all these people like lived way longer than expected. It was like living years longer. And so the fund kind of had to be rescued. It looks like, the money may come back, but it's kind of been this just, they say, oh, we can totally predict how long someone's going to live. We've got all the medical reports, but like, you never know. And so have you had experience investing in this asset called life settlements?
I have, and I'll just say I don't have any comment. I'll just say this: insurance companies don't love life settlements, as you could probably imagine. And so, have I known people that have invested in them? Yes. Have some of them had the similar experience of you? Yes. Have some of them had better returns in the market? Yes. I also know people on the other side that are brokers. So if you're listening to this or watching this and have a big life insurance policy that you're like thinking about canceling, you should always talk to a broker to see like, okay, if the insurance company will give you this, is there a person that will give you more than that? And there's two sides of the coin. And I will just say that, yeah, I mean, I'm glad that these people are living longer. There could be some ethical dilemma as well, as like you're literally investing in
death. Somebody dying.
death. But then on the flip side, the person that's getting the money is actually getting a better deal. So it is awkward because it's like for you to get a better return, that means people are dying faster. But it's from an ethical standpoint, it's very interesting.
Well, it's interesting, and I'd love to have a conversation about this for a minute because how we got around it, or how I thought about it was, well, basically these are all being listed on a public exchange through a broker. These are people that like no one wants to sell them, but they would sell, if somebody had 5 years left to live, potentially, let's say they're 85 years old, they've got diabetes, they've got, COPD, whatever the things are, all those things. And they'd say, okay, well, the premiums are going to cost, quite a bit more. And so you kind of calculated, okay, what's this actually gonna be worth? And you bid on it, kind of very similar to a real estate transaction. And so
totally.
And then the family gets money now with the certainty that, hey, we're going to get some money out of it now, whether it's the third or 40% or whatever it is. And then somebody else will basically make the policy thing. But it does kind of bring up some weird things that, like, when that information came out, it was the fund manager had that information, but nobody else had that information. But like somebody still some like here's some shady stuff happening with insurance policies and stuff and all that. But
you definitely wouldn't want your name to be shared on that list where it's like, I'm with you. I think everyone wins because it's the example of like if Bob Smith has a life insurance policy and he could maybe cash it out and he'll get 50 grand, but then he goes to the marketplace and the marketplace will give him 200 grand. But what that tells you is that situation, everyone wins in that scenario because the investor hopefully gets a non-correlated return. Bob, instead of getting 50, gets 200, doesn't have to continue to pay for that policy. And then, I guess the only person that loses in that scenario would be the insurance company. Hence why insurance companies don't love the fact that these things happen, but it's good. It keeps them in check.
Yeah. So I obviously no pitch for this. I think for me, being a real estate professional, we probably have a lot of real estate professionals that are going to be listening and watching this. I guess if I pay no taxes anyway, or if I'm pretty much down to zero or almost zero because of my depreciation and other things, is there still a reason to do this? And if there is, like no financial advice, but for someone like me who, makes money, but it's long-term, like what percentage of someone's money do they put into something like this?
Well, let me ask you this. You may or may not do Roth IRAs. Do you do any Roth?
I have a Roth. I have like 20K in a Roth from a long time ago. I don't think I qualify for Roth.
If you could qualify for a Roth, would you put money into a Roth if you could qualify and have control over it?
Sure. I mean, the challenge with Roth though sometimes is that it's hard to find. Can you get a fully self-directed Roth? I guess you can.
Well, you're just selling my point more for me. But think about it. Like just from a wrapper standpoint, you pay almost no taxes now because of real estate. Okay.
Yeah.
So that's great. Your money's got to go somewhere. So it's either can be parked in a high yield savings account, it can be parked in other investments, and hopefully you can offset those taxes anyways. So my question to you would be, okay, your money's got to reside somewhere. And so we would just do person A is going to put their money in a high yield savings account and then invest. Person B, Bronson, is going to put their money into a life insurance policy and then reinvest. And we're going to see the difference. And what you would find is person A would be ahead for the first 8 years. They would be ahead on paper. Now, person B would have more protection, more credit protection, better foundations, blah, 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 blah. And at a certain point would get a greater internal rate of return than person A. Person A would have maybe an opportunity cost plus because they may have a little bit more money that they could invest. I don't know if you're someone that likes to invest every single penny. I like to have margin.
I overinvest. I like invest to the point where I cash forward, just put it all in.
Yeah. So we're different. I very much, and I think Nate's more like you. I'm more like, hey, I prefer to have like a year's buffer and blah, blah, blah. So for me, it's not going to matter either way. But for some people like the crypto people, or maybe yourself, like you're going to want every penny. Then there's a true difference because in the first, 5-6 years, you may have a little less money in in scenario B. But scenario B is, I believe, way better, like has a stronger foundation and is giving their dollars a lot more jobs on the life insurance side and still gets their access to use money. But they're a little bit slower out of the gate. Now, traditional life insurance is a lot slower. The fact that we're breaking even in year 4 or 5, the fact that in year 2 you're putting in money and your policy is increasing by more than what you're putting in, like it is a little bit slower out the gate. But the way that we're designing it, we're taking a huge, L that a lot of people have to sell life insurance with you having zeros in the first couple of years, which is incredibly difficult. But they can still sell it to some people because life insurance long term is really, really valuable. So if you can still give someone like your family all the benefits long term to life insurance and give them 80-90% immediate cash value to do what they want to do, for me, that message tends to resonate with a lot of people that are real estate investors or entrepreneurs.
I like the liquidity standpoint. I want you to jump into in a little bit, Nate, too. But for liquidity, so what I've done, this is what I've done, whether it's right or wrong. I bought a bunch about 5 years ago. I bought a bunch of physical precious metals, and you store them third party. You can borrow against the value of it, about 10, like a HELOC. So you can borrow against it.
How much can you borrow against from the equity value?
75%. 75%
pretty good.
Value.
That's
pretty
great.
good, and it's about a 10%. Just for the days you have it. There's no additional fees. So if I need to close a deal, I can use it and put it back. But I guess one question, could I, instead of had bought that, when I bought it, is fund a policy, then go buy some of that.
Totally.
Have kind of the same thing. Do the returns cover the borrowing costs? So again, if you're getting 2, 3, 4, 5, 8% when you borrow, typically does that cover the amount of like loan costs that it actually costs?
Yeah, the loans right now vary because we represent many different companies, anywhere from 5% to 8% right now. 8% on the high end.
In the range of what's
5% on the low end. We would recommend at least paying the interest. But I mean, if you're a sophisticated investor, you don't have to pay the interest. It's just one of those things where that's like disclaimer, not giving investment advice, insurance advice. But if you're going to use a loan, like the fact that someone can at least maintain the interest. But yeah, what you're saying is, could I fund life insurance? Could I protect my family, get all the benefits? Then could I put my money in precious metals and then borrow again? The answer is yes, you could do that. Yeah, you could do that. And
you're just more leverage. I'm not saying
it is more leverage, and the precious metals, it's not free money because you're getting the benefit of precious metals, but you're also getting a control cost of 10%. So would I do that? No, but you could easily do that, and you could get $1 that's now in precious metals, in life insurance, and in real estate, and you could accomplish that if you wanted.
Right. So you got multiple things. I think the reason I like precious metals is just the hedge from inflation and having. And instead of storing cash, obviously you store cash somewhere, you can put an insurance policy, but instead of having money in a bank account, having money available that way.
Totally.
Nate, why don't you jump in here, brother? I know you got some stuff to share.
Yeah, I wanted to hit you with the contrarian question of the day.
Perfect,
which is,
dude.
what do you believe about money that most people would disagree with? And I can give you a second to think about that. And the reason I'm asking you is because he's like
foaming at the mouth over there. He's so ready to answer this. He's like ready to jump across that.
How long do we have?
We've got time, so let me just hit you with it. What do you believe about money that most people don't?
Well, I number one believe that you are your greatest asset, and majority of people devalue their ability and they themselves as an asset, and it shows up everywhere in their balance sheet and how they make their money and how they view their money. And so I very much am, when I work with people, efficiency is one of my favorite words. My definition of efficiency is removing any friction to get to a desired result. So number one, get really clear on what you want, and then number two, be really good at highlighting all the friction points to be able to get there. And so for me, whether it comes to money, whether it comes to business, really when it comes to investing, whatever that is, it's like, what is the outcome? What is the goal? And then what are all the friction points that are getting in the way? What I find is a lot of people are compounding their money and they're doing all these kind of things, but they're almost putting compound interest before themselves. And as a result, there's that lack of clarity shows up in a lot of different areas, and it allows them to not show up powerfully. And so I'm a really big fan of like underlying, like, you are your greatest asset. Make sure that you're not doing anything to like dismantle that or put a shadow on that. And then make sure that your money is aligned with you living intentionally. Like I have this one life sign as a reminder that we have one life. I don't want to do anything that tarnishes or cuts corners or takes me away from living my one life well. So I don't know if that's like contrarian, but I see like a lot of advice does not even reference anything about you living your one life well. It's all about like first principles of compounding your money and risk management. All things that are important, but they should come secondary to figuring out what you want. And I'm a fan of like sometimes doing the exact opposite of maybe what you should do on paper. So I don't know if that
I love
answers
it.
the question.
It actually reminds me of something that both Grant Cardone and Alex Hormozy are saying a lot on social media, which is something to the effect of, if you make under 100 grand, the asset you want to invest in is you,
100%.
right? So whatever that looks like, buying courses, reading books. Bronson and I read a lot of books. Bronson might be beating me this year. He's
I got
crushing it.
59 this year. I did a bunch in Alaska, so I'm working on it. Yeah.
Let's go. And it's kind of funny because I had a friend ask me about these different books. He asked me about like 8 or 9 books, and I'd read every single one of them. And to him,
Cool.
I've read every single book ever, which is not true, but I have read many hundreds, maybe 1,000. But to go off that point, and I'll just kind of throw it out there. What does investing in yourself look like today? Like obviously you're really, really successful. You got a lot of cool stuff going on. What does investing in your family and yourself look like for you?
Nate, you're going to love this. You ready for this?
I'm ready.
It's called the value leverage framework. So the first thing is, if you're not really clear about the value prop that you bring to the table, number one thing that you should invest in. You have an input, you create an output. We're not paid for our input. We're paid for our results and outcomes. So first and foremost, it's getting really clear about your value prop. Who are you serving? Are you working for somebody? Well, they're the person that you're serving. Are you working for the market, which is, entrepreneurship? Who are you serving? What problem do they have? How do you over deliver on that problem? And I think first and foremost, a lot of young people need to really figure out value proposition. I wish they taught this in college before you're going to decide on what you're going to do. Like, let's figure out value prop and figure out not all problems are created equal. You could work at a hospital. You could be a janitor. You could be a heart surgeon. One is going to get paid a lot more than the other. It's not that one's more valuable in the eyes of God, but one's more valuable in the eyes of the marketplace. And so it's figuring out why and what they're doing. Once you figure out your value prop, then the next thing is leverage and amplification. How do I get a greater outcome or have less input for the same outcome? And that's forms of leverage. Big fan of Naval. Just one of my favorite books of all time is the Almanac of Naval, which doesn't shock me that you have that right there.
Right
and
here.
So it's like for me, when I'm choosing to invest either in businesses, in myself, in investments, I'm figuring out, number one, if I can't determine the value prop and whatever the thing is, I will not invest money. I've made way too many mistakes being like, everyone's doing this. It sounds amazing. But if I can't, I'm a decently intelligent human. If I can't on a really simple figure out how they're making money, I'm not investing. And I'm okay missing a home run or two if that's the case. But then the second thing is, once I figure out that value prop, how can we invest in leverage? And right now, there's no greater lever than AI and understanding AI. And so if you look at me right now, it's figuring out, okay, how do I invest in technology that can take, our value props? And our business has a lot of different value props. And how do we amplify that and serve people either faster, cheaper, or better? But for us, it's like, how do we cut out more friction? Going back to, efficiency, how do we cut out more friction to get to those outcomes? And so for me, that is value leveraging is the framework of investing in yourself. Because I always like when people are like, invest in yourself, that's always fluffy to me. So it's like, figure out how you provide value and figure out the best way that you can provide value as a human. Once you figure that out, then figure out all the different lever pieces that can amplify or allow you to put less input to provide the same value. And you hit that. I believe that is like the best way to invest in yourself. And then when you're like, I'm at a solid place, that's when you start diversifying and reinvesting in other things.
Well, I think too, this is a huge point I think most people miss. And I think as a passive investor or as an active investor, this like changed my life, because I heard this quote by Jim Rohn, who's a motivational speaker. And as a paraphrase, he says, make yourself valuable to valuable people. And what I realized is, like, if you just simply find who you're finding value from, And you probably get this from time to time, Caleb. I get people come, hey, let me, mentor me, or hey, work with. They're always asking for stuff, or hey, or how can I help you, or something. It's like, well, I don't know. Like, what do you do? Like, I don't know. I don't know
You
what
tell me.
I don't know what's going
Yeah.
on here. Like, and so, but like, what happened? I heard that quote. I was actually at a high paid mastermind event on a cruise, and I basically said, make yourself valuable to valuable people. Well, here's this guy who's a syndicator, and I've got a lot of value from his stuff. Maybe I can try to figure out in his business. He would teach people to raise money for real estate. But I was like, I wonder how it's going for him actually raising money in his own business. So I said, hey, can we talk about your business? He kind of blew me off initially, but then we got together at the martini bar at 3:30 p.m. the last day. And I said, hey, how's it going in this area of your business? Are you like, how are you growing? Whatever. They were having some struggles there. So I said, well, can I or someone else can be a part of helping find a solution here? And then it led to this partnership. And I went from raising $100,000 for one deal to raising $15 million together. I probably made $1 million off of that one conversation, right? It totally catapulted me into so to me, it just seems like figuring out your area of value, but really going to people that are valuable people and finding a way to help solve that problem. Let me ask you kind of in relation to that, so you help people solve problems in finance, right? That's kind of what you do. You provide education, you provide different resources. What's like an emerging problem that you're seeing that maybe you guys aren't doing something in yet, or you're kind of looking at in the future, particularly with AI, particularly with shifts of, like you said, going to college is going to change. Like where do you see things going when it comes to finance and where people are going to need help in those areas?
That's a great question that I'm thinking a lot about right now. And so we love serving entrepreneurs. Like if you our big avatar is the entrepreneur. And so they are overpaying on taxes, they're commingling their funds, they're not really, they're outside of their business, they don't really have an investment frameworks that they're confident in, they're lacking systems, and they're not tracking their money. Those are just some of the many things that entrepreneurs are struggling with. And so I believe that accountability and community are two things that are really, really key. And so I want to invest in those two things. And then how can I get AI to solve the rest? So for example, you could invest in things, but I'm like, could AI replace this? Could AI replace community? It's hard. It's hard for my mind to figure out where it would. And when it comes to accountability, can AI keep you accountable? Yes. I do feel like there's a difference when it comes to human accountability versus an AI. I believe that AI will pretty much be able to do everything else. And so for me, I'm almost figuring out, does this increase community and connection? Does this increase accountability and implementation? Those are the two things that I'm trying to focus on humans. Everything else, and I mean everything else, from like portfolio management to, I believe sooner rather than later, most people in the industry disagree with this statement that I'm about to make. I believe people will be buying life insurance through AI in 3 to 5 years, or have an option to be able to do that. I believe that's going to be a thing. And I believe people, for the most part, are going to get served better, because most people in our space are not doing well, and they're getting way overpaid for the job that they're doing. And so if a company is like, hey, by the way, let's cut out the middleman, pass it along to, and make a product better. Yeah. I'm a fan of that. I know a lot of people are like, how dare you say that, Caleb? I'm just a fan of like cutting out anything unnecessary friction to give people better offers. And so I believe most people are going to turn into life coaches in just a lot of different spaces, because whether it's an attorney, whether it's like portfolio management or designing a life insurance policy, I do believe soon those things will be done better by AI versus, and I don't need to tell you guys, like you guys have all interacted with people that have given you a worse outcome as a human for potentially selling you a product. And if you could just go to a place and say, I want the best, most efficient policy, period. It's like, it doesn't take 101 questions to get to that outcome. I want the best insurance policy, period. That's for cash. And boom, every company analyzed, and it gives you the best policy. Those are the things that are coming sooner rather than later. And most of the people in our industry disagree with that statement, but they will be wrong. So
yeah,
the
awesome.
level of mediocrity in just general life is astounding to me at some points. And, so whenever I meet people like you, Caleb, who, you improve 0.5% or 1% every single day, the compounding effect of that is AI probably can't replace you very quickly, but it can replace a lot of people.
Yet.
I know.
I'm like
it's
very
learning.
like, I don't think it's very peaceful for me. Like AI will destroy us all. And so it's like, I'm not on my high horse on anything, which keeps me very motivated to be like, I want to be relevant in 5 years. Like that's my goal. It's not, how can I be relevant in 5 years?
I love it. Well, Caleb, I really appreciate you, man. I feel like with the and asset and talking with you, there's so much more we could talk about. So we'll have to have you back for a Caleb and part 2. So, man, just so appreciate you, your heart, your faith, your just really desire to help people, and just I just really love what you're doing, man. How can people connect with you, follow what you're doing, reach out, and hear about what's the latest from you?
Yeah. So if you're listening to this or watching this and you're like, I want to learn more about life insurance, I'll say this. If you email me at caleb@betterwealth.com, we will literally get your physical address from you and send you a copy totally on us. And so if you email me at caleb@betterwealth.com, any of your listeners, I'm more than happy to send them a copy of the And Asset book and any other resources, because I do believe it's not for everybody, but for the person that really wants to be more efficient with how they save and use and protect their family. I do believe that when set up and used properly, it's one of the greatest strategies out there. And so that is probably the best way. We're on YouTube on BetterWealth. You can go to our website, betterwealth.com, but emailing me and just letting me know that you've come from this show will take care of you and your audience. And so it's an honor to be here. And I would love to do part 2. We could talk about a lot of different things. And I feel like we scratched the surface on life insurance. There's a lot more in the weeds.
I'm sure.
Questions that maybe if there's some of your community it wants, like, hey, why didn't you talk about this? Let's compile that, and maybe we'll do like a part 2 where it's like,
I love it. We'll talk about
ask your life insurance agent these 101 questions.
We'll talk about all the weeds and how to get a chicken in less than a minute. So we'll get that going. But Awesome. Hey, Caleb Guilliams, thanks for being here, brother. Appreciate you. We'll look forward to catching up with you soon. Awesome. Well, I just love that interview. I feel like Caleb, just so much great energy of just how do we really maximize what we have. And I've actually thought of a new way for me, especially with those types of policies where they're low cost for the first couple of years, to be able to get 95% cash value. That was news to me. So amazing when you talk to people like Caleb, you just learn something new about an asset that maybe you even gave up on before. But what were your thoughts?
So I've got two big takeaways from that. Number one, his definition of efficiency is removing the friction points between you and your end goal. I thought that was a really, really helpful way of thinking about it. And he's right. If you think through every single day, if you think through what are my biggest 1 or 2 friction points, and then you find ways of removing those, it's amazing what you can accomplish. It really is. And then the second thing is he really but I need to start building my children's banks, right? I need to start investing in their whole life insurance because when they graduate, it'll be an asset that they can use to buy real estate, to buy whatever the asset classes that they want to go into. So really, really, really terrific stuff there.
Yeah, I even thought about it too. I mean, it's just, there's so much we talk about in the Wealth Forum about really helping, our kids to, that's like a conversation that comes up all the time of how do I help my kids to not be a spoiled kid, or how do I help them to inherit wealth or grow wealth, or how do I teach them about money? And what a great way to start a kid is weeks old and they started an insurance policy so they can kind of teach. And it's just, what a great way. So with my daughter, I may end up doing that just to try to help her to learn as well. So Nate, appreciate you. Thanks for being here. To our audience, really appreciate you guys being here. That was a great conversation. You're the average of the 5 people you spend the most time with. You've been hanging out with Nate and I, as well as Caleb Guilliams. Hope you reach out to him and connect with us on wherever you can connect. But thanks for taking the time to educate yourself. Look forward to seeing you on the next episode of the Mailbox Money Show. You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.